Good evening, everyone. Time for another silver update. Now we're looking at the 2-hour chart of silver provided by netdania.com. You can click on the link below. The key thing I wanted to look at here on this chart is the resetting of the MACD. As I pointed out before, the MACD is a trending indicator. In other words, it is to be used when a market is trending. So we can see here in the middle of this chart that we have pretty much a trendless section, and that runs from roughly March through late May. So you can see here this trendless section of price. Now we have MACD signals here during this time, and you can see those. Here is a buy, and there's also a sell here, and those correspond with these price points. And what we're looking for is whether or not the trend is up or down with the MACD. In other words, is the signal working? Now the big spike that we're looking at here, sell-off spike indicator, would be this one here. You can see at that peak it corresponds with this peak. Obviously that is a good sell signal, because if you would have taken that sell signal and sold silver there, you would have sold and caught this tremendous downtrend here. Now that led to a buy signal here, and that buy signal is not a good buy signal. And so what that means is if the sell signals are working and the buy signals are failing, you're still in a downtrend. Now when you start to get choppy behavior, where you see here's a sell signal and here's a buy signal, and then the price is just kind of going sideways from there, another sell signal, another buy signal, back and forth and back and forth, then that's indicative of a directionless market. Now what I wanted to point out about what's happened recently with the price action, of course, is this recent uptrend that we're looking at, and we've been watching this very carefully, but also this movement from right here, because you can see that the spike, very large spike, occurred right there in the MACD, and that corresponds with this price spike. But you can see that what's happened, that the price trend has actually continued up as the MACD has reset itself. So if we do get a turning up here in the MACD, which would be a new buy signal, because you can see we're all the way down to below this one that we got here without the price correcting, then that would be more indication of a change in trend. Now that's just something that you have to look at relatively on the scale that you're on. Those things don't hold up. Of course, we've been looking at the monthly, and those things don't hold up for monthly except for maybe back here. But you just have to look in the time frame that you're looking at to try to find whether those signals are going to hold. So as we go out to the 4-hour, you can see huge sell signal right there, and that corresponded to a significant price decline from that point. Huge buy signal here didn't correspond with a price rise, but we did have a buy signal here, and we got a very good price rise, and we've already had this sell signal, and it's worked off a lot of the signal so far, something akin to what we had here. Now you did see back here that even after it had done that, it continued down, and then we ultimately got a decline. So it doesn't mean for sure that the bottom is in. It just means that if we turn up from here without having a significant correction, then it appears that the price signal action has flipped to the upside, and now from this point moving forward, we will be able to take the buy signals and ignore the sell signals, because we'll be in an uptrending market. Now I wanted to play a little bit of Belange P's latest, and this is, he's turning his attention to silver. I think he brings out some important points here. I want you to listen. I'm going to stop this and comment, but I want you to listen to his statements about the difference between a monetary metal and an industrial metal.
You see, industrial metals and monetary metals are two very different beasts and have to be treated differently. It's a mistake to apply the standard rules of an industrial metal to one used for money and vice versa. An industrial metal, just as any other commodity, tends to have a very small above-ground supply. It just doesn't pay for a user of the metal to stock a great deal of it because the above-ground stock represents working capital that takes cash away from other productive purposes. As a consequence of low above-ground stocks, the price of the stock is very sensitive to mining supply changes. This makes the price very volatile and further detracts from any incentive to keep a large amount of the material on hand.
So my first comment to that would be that the argument is that and we're talking about silver here, that the reason that you wouldn't want to have a large above ground inventory is because it costs money. Now, the first question one would obviously ask then is, why is that not the case with gold? Because obviously there's a tremendous amount of money that is stored in gold above ground. And I think his answer would be, well, that's because we have gold leasing. So my reply to that would be, do we have silver leasing? And if not, why not? And if we do have silver leasing, then why is silver any less able to provide investment returns as much as gold is? So we'll continue.
Because the user of the metal is primarily in the business to make a dollar profit or other currency profit, when the price of the industrial metal goes up, it damages business. The response of the user is to either seek substitutes, reduce quantities used, reduce volume of sales, or hedge supply. It's the impact on the users that price has which limits the upside of price increases. The other thing that limits price increases is that as price goes up, more supply comes online, and because supply is already a large fraction of above-ground stock, the price tends to be regulated.
Now, I've already addressed these points as well in regards to silver by pointing out that silver is both inelastic in supply and demand. So those arguments would not apply to silver. They definitely are accurate in regards to industrial metals. And there's no question that the demand for things that use copper, for example, that if the price of copper goes way up, that they will find substitutes for copper. But that's not the case with silver, because if we look at the uses of silver, there virtually are no substitutes, and one of the only substitutes is gold. So the argument about elasticity of industrial metals does not apply to silver, in my opinion.
Compare this to a monetary metal. A monetary metal's primary purpose is as a hoardable store of value. The amount that is held, simply for the sake of holding it, is very high. New supply tends to be very small as a percentage of what's already held, and thus supply is not a large determinant of the value. Rather, the value is more a function of how tightly held the existing above-ground supply is. Demand can be virtually unlimited for a monetary metal. And the funny thing is that the higher the price of the monetary metal is, the better it can do its job as a store of value, and the more desired it becomes in that role. Thus, the value of a monetary metal has no upside limit imposed by industrial considerations. Gold has always been money. Silver, at least in recent times, has been more or less schizophrenic, having some qualities of monetary metal and some qualities of industrial metal.
Now, silver has always been money, and the only reason why silver is, as he terms, schizophrenic is because there's an organized plot by bankers specifically to demonetize silver. And as we'll see in his charts later, that it's actually being remonetized. And of course, that's the whole basis behind my entire blog and YouTube channel and everything else, is that Silver for the People is the people remonetizing silver and using it to beat the bankers at their own game.
Because of its heavy industrial use, I've always been a little skeptical of silver and questioned if the gold to silver ratio would ever come back to 16 to 1, where it was when silver was used primarily as money. But now that silver's price relative to oil is back down to its historic lows, and gold is more richly valued than silver, a time has come to ask the question, is silver likely to continue on its trajectory to lose its monetary status and become even cheaper relative to gold? Or is it likely that something will change the trend that we've seen for the past 45 years? Let's take a look at the past 10 years worth of supply and demand statistics from the Silver Institute. I'm going to graph these numbers in various combinations to show you that it's telling a very interesting story of what the future holds for silver. Here I'm showing new mine supply on a year-by-year basis. Note the steady increase in silver that is brought out of the ground. There's no sign of peaking production, but that's okay. I estimate that there's still about 14 billion ounces worth of above-ground stock being held, and so fresh mining supply only represents about 5% of potential supply. The rest.
Now that figure of 14 billion ounces, that's a major point of contention. I'm not going to dispute this here, but I'm going to, when we do look at the infographic on silver, I'm going to make some mention of it again here.
This is tightly held as a store of value. Don't worry, this is actually a good thing, not a bad thing as many analysts would have you believe. What's important is how tightly held the above-ground stock is. How much do people want to hold it and make their stock grow? Well, let's take a look at net industrial demand. I've calculated net industrial demand by subtracting the silver recycled from scrap every year from the amount used by industry. You can see that the net industrial use for the past decade has been fairly flat. In fact, since 2008, it's even declined a little bit. Contrast this with net hoarding. This number I calculated by adding together the quantity of silver used in jewelry and that used for making coins and bars, and then subtracting out government dishoarding. The result is the amount of silver that we can expect to be going into hoards every year. The trend in hoarding has been steadily increasing since 2006. Recently, and this is a very important development, net hoarding has exceeded net industrial demand. The character of silver is changing.
Now that's a very important point, and what that means is that the stackers are beginning to make a difference and are going to be the key difference in the price of silver going forward. Now, of course, the percentage of money that goes into silver as opposed to the percentage of money that goes into gold is minuscule. So the growth potential for that, and he's going to get to that in just a second here, and then we'll go to the infographic. But the growth potential, investment potential for silver is 100-fold that of gold, in my opinion.
And probably the most obvious way that this can be demonstrated is by looking at the percentage of newly mined silver that goes to be used in industry versus the percentage that is being hoarded. The upward trend in hoarded silver indicates that more and more people are demanding silver for its store of value properties than valuing it simply for its industrial use. More than 50% of the silver is now going into hoards as opposed to just 30% a decade ago. If the trend continues, then silver may be able to regain its historic role as a store of value for the masses, and the gold to silver ratio could indeed approach older monetary numbers, maybe not 16 to 1, but certainly lower than 65 to 1. And this makes silver an attractive speculation right now. Of course, one needs to consider this fact. If above-ground inventories of silver are currently at 14 billion ounces, then the current above-ground stock is worth only about $280 billion. Gold, by contrast, has an above-ground stock of a little over 5 billion ounces worth a total of $6.5 trillion.
So that was the figure I wanted you to think about here. If he's correct about the above-ground stock of silver, and I'm not sure if he is or not, then that above-ground stock of silver is worth $280 billion. But the value of the gold is trillions and trillions of dollars. So it's a many-fold factor. And if you think about it, all of the silver in the world is only worth $280 billion. What if money starts bidding for that silver? That's going to be the big key. So let's go over to the infographic. And this is silver visualized I just wanted to bring this up to try to point out some things so that we can get an idea of how much silver there is and whether or not we believe that that 14 billion is accurate. So here, of course, is the small sizes here. You can see 5, 10 grams, a troy ounce of silver compared to a pocket knife, etc. You can also see here a kilogram gold cube compared to a kilogram silver cube. And you can see the size difference. Now, you know that when you look at just a silver eagle and how much larger that is than a gold eagle. And they're both 1 ounce. So that tells you that the relative density of the metal is greater with gold. So silver is going to be larger. A 1 ounce coin is going to be larger for silver, but not that much larger. And a lot of the arguments that you hear are that, well, silver is just so bulky. Well, silver is not bulky. You can see that silver is only a little bit bulkier than gold, and gold certainly isn't bulky. You can carry on your body a lifetime worth of wealth in gold, so that's not bulky. The issue is not whether silver is bulky, the issue is whether silver is undervalued. And I think it is way undervalued. So now you can see more of these here. Here's a 15 kilogram bar of silver. And then here's 1 ton of silver. So if we go down here and you can see that same 1 ton, you've got this man standing next to that. Right here is the 1 ton. A 10 ton is actually going to be about half his height all the way around. So when people talk about it being bulky, how much is 10 tons of silver worth? And could you bury that in your backyard? Well, actually you could. And you could easily bury this in your backyard. Would you want to? Probably not. But I really don't buy the bulkiness argument. So let's get down to the big infographic here. This is the total amount. First of all, we're going to look at world silver reserves. And you can see, well, you might not be able to see it, but what they state here is that world gold or world governments have practically zero silver reserves. It costs to store the precious metal, and the value has not been significant compared to gold and other precious metals. Well, does it cost to store gold? We just saw that gold is just a little bit smaller for the same weight than silver. So what is this argument? Is it, again, as I pointed out before, there isn't any silver leasing? And if there isn't any silver leasing, then why isn't there? But is gold leasing actually a legitimate operation, or is that a fraud in and of itself anyway that's going to be a gigantic Ponzi scheme that comes unraveling? I suspect the latter. So let's get down to the big infographic here. And this is all silver mined in history. So you can see here, this is going to be 1.5 million tons, and I don't have the conversion ratio for ounces, but you can see here how large of amount of silver that is lost. So you can see that silver currently in existence is said to be 777,000 tons, and the silver lost is said to be 634,000 tons. So what that means is, of all the silver mined in history, almost half of it has already been lost. Now, can we say the same thing for gold? Probably not. In fact, we could probably say that virtually none of the gold has been lost. Certainly the gold that's maybe at the bottom of the ocean in some ships that haven't been found yet, although they're still out there searching for them, is maybe a percentage of a fraction of all the gold. So we could safely say that we still have all this gold, but we've lost half the silver. Now, if that's true, and the historic ratio, we'll just choose the 16-to-1 ratio, shouldn't that ratio be cut in half? Shouldn't the ratio, the gold-silver ratio, be 8-to-1? So that's something to think about. I don't know whether there is 14 billion tons of silver above ground. I suspect that there is not. I suspect that there's actually far less. But I do believe that silver is being remonetized. It's being remonetized by the people, and I think that we haven't even seen a panic buying yet. So I think when silver does get remonetized, Belange P is really going to be surprised that how fast it is remonetized and how fast it catches up with gold. And we'll talk to you next time.